300 plus points for the Sensex, 120 for the Nifty. Mayuresh Joshi from Angel Broking is now joining us. Mayuresh, good afternoon. Surprised by the move this in the last 1 hour?
Afternoon, Pankaj. Again, largely if you see the kind of liquidity that is gushing through the markets, I'm a little bit surprised, but again I think because of the liquidity factor, along with what has happened with GST, I think it's a landmark reform and you can't just brush it by saying that it's been discounted and factored into the market. So largely again I think it's on both counts. I think the reform process is followed by the central government, and the bouts of liquidity that we're witnessing is taking the markets higher, and again the expectations largely are that the positive momentum in the markets might continue, except blips that you might see because of global concerns.
Right. Would you be a buyer at these levels? I mean, markets is just not stopping. Even if there is another 5-10% move which is there, shouldn't one start to buy?
So again, I think if you map valuations and you look at the market move, I think the valuations are close to near-term averages and long-term averages as well. So having that into consideration, you're probably then going to look at sector biases. Now even within sectors, a whole host of sectors are probably richly valued at this point of time, and the difficult part becomes in identifying stocks within these sectors which are probably fairly or less reasonably valued. So in that sense itself, I think it's a difficult task, but again I think with liquidity continuing and the positive momentum continuing in the markets, any dip, I think qualitative stocks can be looked at long-term investors. Again, the only caveat here is that if something goes wrong globally, I think the markets might come down, but again I think that is one factor that is largely unknown at this point of time, and everything is being brushed aside because of what we are seeing in terms of positive sentiments getting played out because of the liquidity factor.
Right. As you're saying that markets may come down, what should be a good sort of a level to buy in? Currently we are at 8,680. What's the level that you would look to buy at?
So again, I think as we've seen for the past so many weeks, I think any correction that probably comes, even if it's a 100 bips dip onto the markets, that's quickly getting bought into. So my own sense is that wait for corrections probably to take place, and again invest in a very staggered manner, because you cannot really assume levels probably to come. Those levels might actually not come. So again, I think buy in a staggered manner over the next 2 to 3 months. I think that will probably reduce your impact cost, and the chances of your ROI over the next 12 to 15 months improve greatly.
Right. We're just getting numbers from Westlife Development. It's of course the owner of McDonald's franchise here in the West in India. Consolidated net loss at 2.9 crores versus about 5 crores of loss. So the losses have reduced, but don't really think the markets would care about that anymore. It's just a loss reduction. So let's just pull up Westlife Development. I think you will get a sense of what's happening in the stock. It's not a very frequently traded counter as well. Really no change, really no sort of an impact coming in. Mayuresh, you looked at Bharat Forge numbers. Numbers of course were quite poor, but the management commentary that did the trick as far as the outlook is concerned, that from Q2 we would start to see growth coming in.
Well, then largely, Pankaj, I think if you look at the cyclicality of this industry, Q2 is always better than Q1. But again, I think the management commentary was a little bit cautious from an FY17 perspective. So though they're hopeful in terms of recovery in the second half of this fiscal, one really needs to understand the kind of destocking, at least at the inventory levels on the dealer front. Secondly, I think you should also take into cognizance the fact that Class 8 trucks are still under pressure, and one really must see some amount of an uptrend to start over there over the next few quarters to say that the worst is over. Third, I think the kind of fall that we've probably seen in the oil and gas business, with oil prices and gas prices staying where they are, you might still see subdued performance coming through. Fourth, I think the domestic performance has been relatively better, but again I think still expecting over the next few months some sluggishness to probably creep into the markets. We've already seen that in terms of how the MHCV and CV numbers are getting quoted at this point of time, and the LCV numbers. So largely I think it's going to be a sluggish year for Bharat Forge, in my opinion, at least FY17. I think if we see global developments, if we see Class 8 improvement happening Q3, Q4 onwards, along with some amount of respite on the oil and gas space, along with improvement in volumes on the domestic front. Those consolidated factors might start pushing up revenues. But again, I think Q2 expected to be strong. It's always been a strong quarter. So largely, I think it will be the numbers that will do the talking in Q3, Q4. But the markets are presuming that FY17 is going to be relatively soft for Bharat Forge. So largely, I think one must wait for numbers to come through and consistency in that. I think auto ancillary space, you have to be extremely stock selective at this point of time.
Right. As far as Hero and Bajaj is concerned, any view? Hero MotoCorp is currently 3,400. Bajaj is up about 4%. Any reason to cheer the two-wheeler names, or they would continue to give good returns?
Well, as I maintained to the past so many quarters, I think two-wheelers is a space that I'll be very comfortable with on two counts. A, I think the kind of expectations that the street probably has in volume growth terms over the next few quarters, specifically beginning from the second half of this fiscal, based both on how monsoons have panned out and the expectation of the pay commission recommendations to start fructifying. My own sense is that volume growth in excess of 9-10% to say the least cannot be ruled out. Secondly, I think you can look at the operating leverage benefits that these companies will enjoy. If you're looking at greater volumes coming through, I think, and demand coming back in a sustained fashion, the realization growth can be quite substantial over the next few years. And both those factors together will have an operating leverage impact onto the balance sheet. And though input cost might inch up, I think we're always going to see cost optimization getting played out for all these players. So even though I think the margin expansion might not be evident for these players over the next few quarters, the volume growth along with realization improvement will hold these stocks in good stead. And again, I think the entire sense that I'm getting is that the volume growth should be quite reasonable over the next few quarters. I think you have to leave aside Q2, so I think the second half should see significant improvement happening on the base effect. So clearly, I think two-wheelers as a space is something I'm optimistic about.
You know, we've seen a very marginal correction in the MFI space. Do you think it's a buying opportunity? Growth rates over there would continue the way they are?
So again, I think looking at the pie of the overall industry at this point of time, I think it's expected to grow at a very healthy pace over the next few years. Secondly, I think if you look within the space itself, I think there are a whole host of players that have now started MFI offerings. And again, I think a few of them got listed recently. But again, I think within these listed players, one must really understand that the kind of ROEs they're probably enjoying at this point of time, and a few conversions happening to small payment banks with MFI as a part of their business proposition. My own sense is that the return ratios will come down a tad bit, and that will get offset with the increase in NIIs that we are seeing. Asset quality has held up relatively better for these players, and as the economy improves over the next few quarters, the asset quality pressures will start alleviating even from the current levels. So yes, I think there is expectations that the pie will increase substantially over the next 3 to 4 years. The asset quality pressures will start receding. The NII growth should be quite robust. Capital adequacies are relatively stronger for these players, and that will ensure that the capital ratios are maintained in very high digits. So in that sense itself, I think as a space, it is expected to do well. But again, in terms of stocks, I think one must be stock specific and wait for declines on specific few counters before taking a call.
Right, but again, you know, the growth rates over there would continue to be good.
Again, largely, I think, as I mentioned, I think the expectations are that the growth rate should be good, because if you're looking at the pie at this point of time for the industry as a whole, still expecting double-digit growth to take place over the next few years. If that translates into the few players that are operating within the organized space, my own sense is that it will be better than the industry growth that we are probably witnessing at this point of time. And for all the factors that I mentioned earlier, I think it should ensure that the return ratios hold good for these companies. So yes, as a space, I like the space, but stocks within the space, I think one really needs to be specific in terms of what you're buying, and again, at the evaluations thereof.
Mayuresh, thank you so much for joining us here this afternoon. Hope to see you again soon. 120, 130 points higher for the Nifty. Taking a break, coming back in 2 minutes. Anand Tandon will join us on the other side.